Market to Market is everywhere you are. Subscribe to Market on YouTube, find us on the PBS video app to stream on demand, and add our 3 podcasts on your favorite podcasting app.
Welcome into the Friday, August 12, 2022 Market Plus. Joining us again for this segment of this online-only segment. I guess I use the word segment a lot, Naomi Blohm. Segment's a fun word to say. One of the things we left out of our previous segment was talking about the feeder cattle market. We discussed a lot of things, but there's a question I want to start with Louise, and then we're going to back into feeders. Okay. But this one kind of plays in a little bit. This is Louise's question. By the way, good to hear from you, Louise. What are the ramifications of the severe hay and silage shortages in the Plains states?
And we're seeing that ramification in the form of the cattle herd slaughter numbers up a lot right now because they know there's not going to be a lot of feed coming. So that is what's happening. So going forward, I don't know if we're going to be able to truck y'all some hay from Wisconsin, where we are having a wonderful crop. Of course, our dairies need it, but it's an issue. You know, we pray for rain and good snow cover this winter kind of a thing. But the issue then, of course, is that we're going to have less cattle going forward into 2023. We
had another question, but it's about the northern versus southern cattle markets, more live cattle but feeder. But are we at such a, you mentioned Wisconsin, Minnesota, Iowa, having some rain, southern states not. Is that reflective in the feeder or the live cattle market right now?
I'll be straight up, I don't think I've thought about it from that perspective, but now that you asked the question, it makes a lot of sense because the bigger call rates are in the places where it's been drier, and those would be producers who would be hesitant to come in with replacement heifers or do anything with feeder cattle because there's not the access to feed. So I'm going to watch that a little bit closer going forward.
I did not mean to give you homework.
No, it's okay. I love to be challenged. You're not growing if you're not learning.
That and different types of pitches.
Yes.
Sorry for that one. The sports reference that we had at the beginning of the show. So there's the October cattle trade. Let's go back into inflation here. Mike in Stillwater, Oklahoma wants to know, does inflation come to play for futures prices, or are we more of a demand-supply determining prices right now?
Well, inflation is still very much the talk of the town because inflation is still very high historically. So I would think that this administration's goal is going to be to try to bring inflation levels down. So there's that aspect of it, but the reality is if demand so far is still pretty darn good and our supplies aren't perfect. So I think you have a trifecta of things happening right now. And again, all of these commodities are really defending their long-term uptrend lines. When you look at crude oil prices, the grain markets, all these prices from the low from 2020, we are right on the cusp. So we're going to find out in the coming months, are prices going to edge lower for commodities, or are we going to be in a sideways holding pattern, or are we going to take another run up? And so I don't know the answer right now because there's so many moving parts to that, but yeah, all three matter.
I wasn't going to ask you this specifically, but now that you just said something made me think. Let's go back 2 years ago. Okay. The Derecho hit this week 2 years ago. That changed a lot of things. Did that change USDA? Did it change the way farmers think about a good-looking crop coming into August and how they defend themselves? Have we learned anything, whether it's the government, the producer, the broker, the buyer? I mean, have we all learned a lot from that derecho?
Oh, absolutely. Of course, Mother Nature is queen, and she rules as far as what's happening with the supply of the marketplace. The derecho storm exposed all of those bins that were empty, and it made everyone really question this large supply that the USDA had on paper, and the USDA fixed that on that September quarterly stocks report. They, quickly fixed the situation on paper, and they've been very much more forthright ever since, in my opinion. From the farmer perspective, I think, you always wonder what's in your field. You're always curious what's happening out there. So you never know for sure. And then I think from the advisor perspective, you got to always be ready for whatever's going to be coming at you. The one thing also with that derecho storm, we learned about our satellites and our satellite imagery, and we saw how, a fifth of the Iowa crop was decimated. And who came in immediately and bought mass amounts of grain was China, because of course they have some of those satellite imageries that they can capture as well. And of course, I think grain was so cheap that they bought it on the cheap. But my question in the back of my mind, now that you bring that up, is that if China has some of that access to those satellites, they're not coming in right now and buying in mass quantities. So to me, that says that they're not totally worried about the size of the U.S. crop that they need to panic buy. So I'm just going to leave that one right there.
Okay. Do you, from your drive,
Yes.
it's not a satellite, but you did drive a couple of 100 miles to get here.
Yep.
Came through Wisconsin and Illinois and Iowa, and I've taken trips, you've taken trips. What do you see on the 80-mile-an-hour windshield
Well,
tour?
so Wisconsin crops are great. We're lucky this year, and it's a huge blessing for us because of our dairies, so I'm thankful for that. As I got into northeast Iowa, it looked okay. Looked pretty good. And then, going across from Iowa City to Des Moines, granted the sun was starting to set, but from the field or, from the road, it looked okay. So, I mean, obviously we don't know about tip back. We don't know if the kernels are filling out, all of those types of things. But I didn't see any fields that just looked brown and really parched. It looked okay. And I know west of Des Moines, where I did not get, that's where people are going to be screaming, it's not great here, or portions of northwest Iowa and Nebraska.
Southwest Iowa and
we
Nebraska.
know. And I think that you all have been validated from the standpoint of some of these private tours and private forecasters, really echoing the difficulties that those places are having. So we know that. But nationwide, it's not a failure.
Okay, well, let's play a game.
Okay.
If you're in that area that's received the rain and things look good, what do you do? If you're in the area where things don't look so good and you don't see a trend line yield coming, how do those two areas, how do you prepare?
Yeah, that's a wonderful question. So I would say if you're in a place that is going to be with good harvest and plentiful supplies, then maybe you would want to look at locking in basis, because perhaps your local basis widens out because in your area you're going to have availability. Places like northwest Iowa or Nebraska, where the crop is struggling, your basis most likely is going to stay stronger for a longer duration of time. So that's a different thing. So you need to understand how you can work your cash markets and your cash market tools and become an expert with that. You need to also be aware of, things aren't maybe perfect in your world, but then the futures market doesn't just sit and wait for life to go by. It's got to move. You got to keep the day traders happy, and all the things that are happening in the world affect what's happening with the prices on the board too. So there's a lot of things to master, but what I'm cautious of and what I'm hearing is the amount of people who are in the camp of prices are going to go high, they're going to stay high forever, and I'm going to just store it and sell it all next summer. That works once a decade, and that happened last year. So be a little bit cautious, because if all of a sudden South America has this great crop, if something happens and we see, commodity prices edge lower because we're going to be able to get by, prices, like I said on the show, we don't have a reason for $7 corn right now. We don't have it for futures markets to go that high. We need all of those stars to align for next year. What happened last year is in the past, and now we are the futures market. We have to look forward, and those new stars to align are going to be things that happen 3 months down the road.
KL, she just kind of answered your question. Sorry, KL. I've got another KL question I'll get to in a moment, but first I want to get to Shane in Nebraska. Given what you just said, fuel and fertilizer, should they be bought now for 23? Or what do you see in the trend there?
Okay, so I would so totally say if you can just hold on 2 to 3 weeks. I don't think market's going to go blasting higher because we've priced in a lot of the news as far as all of the global drama right now, but we are in a point of kind of waiting to see what happens when things go back to school. Do we see some of that consumer demand slide a little bit because we're done with our summer travel? And I am watching the crude oil market. Again, it's on that 2-year-long upward trend line. $90 is big support for crude oil. But there is a pretty big predominant head and shoulders formation on monthly charts for crude oil that if that neckline breaks that $90 area, it points to prices falling down closer to $65. And that's nothing that would happen overnight. but that would be the potential point lower to go. And it would take, we know that OPEC's going to be increasing some production, but we also saw OPEC say this week that they think Chinese demand is going to be down a little bit, and potential demand around the world might be down. And especially with inflation being high, I really think people enjoyed their summer vacations this year, and they traveled and they went to hotels and they got up all that pent out frustration from not being able to do anything for the last 2 years, and they made it happen this summer. Okay, but now back to school hit, and now you're looking at your budget and you're like, oh, I might need to not spend for 2 months so I have money available for Christmas. So I think you're going to see a lull, and it's going to surprise people a little bit more than what the industry might be anticipating.
All right, that's we'll continue to watch that one. Maybe the next time you come, we'll see where that one goes. KL had 2 questions. This is his second one. With ethanol basis currently $1.20 plus, do we hold all the grain we can until summer of 23, assuming basis will be strong again? He says the local basis is screaming and local crops are marginal or worse again in the area in Fort Dodge. You've kind of covered some of this again, but I felt it was important to recap and say this again for the people in the back.
Yeah, so everyone's basis is going to be a little bit different depending on if they are flush with grain this fall or not. What we did hear from this USDA report, they made no changes to the crush margins for soybeans, so that says that there's going to be strength for biodiesel. There was nothing bad happening for the ethanol numbers, so the demand should be there going forward. But I would maybe have a talk with your local ethanol plant and kind of get their idea and forecast for what could be happening in your neck of the woods, because what's happening in Northwest Iowa is dramatically different than what's happening in Wisconsin.
All right, lastly, what's on your mind? What'd you think about on the drive?
How great the crops looked. That's what I thought about. We're again on this cusp. We are on this cusp of all of these commodity prices either going to start to trade sideways, and if things happen to justify prices to go higher, I don't know that it doesn't happen. It might take until 2023. I'm leery about things going lower for some reason. So I'm not bullish, I'm not bearish, I'm cautious right now. I'm at a point, like I said on the show, we're at a pause, we're at a reset. We're done talking about things that happened in the past. We're trying to think about what's going to be happening with the future. And again, for commodity prices to go dramatically higher, we're in that situation again where we need, confirmation of bad crops in this country. We need to have bad weather at harvest. We need to have, for higher prices, more signs of demand. China's got to come in and buy a lot. So we're at that point, we need a lot of those bullish pieces of news to happen to justify prices to go higher. But because supplies are tight still, we don't have a reason to really fall apart either. So for day traders, they're going to have a blast the next 2 months. There's going to be some great opportunities for them. And just be on your toes. I'm always leery of something happening that would make all of the bullish optimism go away. So just don't get complacent. Just really be ready for anything.
Don't get complacent. Okay, got it.
Yeah.
Thanks, Naomi.
Thank you.
Appreciate the time as always.
Yep.
All right, that's going to do it. Next week, we're going to look at the partnership that's shortening up the grain chain, and Arlen Suderman is going to join us to analyze the markets. I'm Paul Yeager. Thank you so very much for watching, listening, or reading this podcast, and please have a great week.